Have you ever worked with a company that seems to be floundering and the management just can't figure out how to right the ship? Well, activist investors specialize in taking on that challenge, and they've got a playbook for shaking things up and boosting share prices. In this video, we'll go through the activist investor playbook and how artificial intelligence is changing the rules. And when I say activist investors, I'm not talking about pushing social causes. So if you're here to save the whales, this just isn't the channel. This is AI Capitalist, where I help business leaders deploy the tools of AI. And I always keep a laser-like focus on profitability. So to start off, if you're going to be an activist investor, you have to start with a lot of investment capital. Activist investors usually operate through hedge funds, private equity firms, or are just wealthy themselves. They use their analytical skills and business know-how to sniff out companies with untapped potential. Maybe the company is poorly managed, has inefficient operations, or it's facing some other problems that's dragging down its value. Whatever the case, the activist investor sees an opportunity to step in and make some changes. This is where activist investors are a little different from your passive investors. Passive investors just crunch the numbers and buy shares in a company that look like it's going to succeed. Then they move on to other things and they wait, hoping for the best. Activist investors, on the other hand, buy up a big chunk of the company's stock. That gives them a significant stake and a loud voice in the boardroom. Then they'll start pushing for specific changes, restructuring the company, shaking up the board, directors, or even demanding a seat at the table for themselves. Of course, it's not always smooth sailing for these activist investors. According to a Harvard Law School report, only about 17% of activist investor campaigns were successful in 2019. The majority either fizzled out or they're still ongoing. So what does a typical activist investor playbook look like? Well, first things first, they scoop up a big chunk of the company's shares, usually more than 5%. That's when they have to file a Schedule 13D with the SEC, which is like a big flashing neon sign that says activist investor on board. Next, they'll start making some noise. They'll publicly propose a set of changes they want to see in the company, using everything from social media to press releases to interviews to get their message out there. They want to rally other shareholders to their cause and put pressure on the board to listen. This is where AI-powered sentiment analysis is going to change the game for activist investors. Sentiment analysis empowers you to track how shareholders are feeling about the company in real time. Are they frustrated with the current management? Are they hungry for new direction? You're going to know before anyone else, giving you the upper hand, rallying support for your cause. Then it's time to sit down at the negotiating table. The activist investor will go head-to-head with the board, trying to convince them to see things their way. It can get pretty heated, especially if the company is putting up a fight. Imagine walking into that boardroom armed with data-driven insights on the company's strengths and weaknesses and potential for growth. You'll be able to make a compelling case for your proposed changes, backed up by hard evidence that even the most stubborn board member can't ignore. If negotiations stall out, the activist investor might have to bring out the big guns, proxy fight. This is where they try to get control of the board by teaming up with other shareholders and voting in their own slate of directors. If they win, they'll have the power to push through their desired changes. In some cases, there are only a few investors to sway. But if you look at publicly traded companies with thousands of voting shareholders, AI can really up your game. By analyzing past proxy battles and shareholder voting patterns, your AI is going to give you the ability to predict the outcome of the vote before it even happens. You'll know exactly which shareholders to target for the campaign, and you'll be able to tailor your messaging to resonate with their interests and their concerns. Finally, once they've achieved their goals, the activist investor is typically going to sell off their shares and move on to the next target. When it's time to cash out, the knowledge that you've gained is going to help you develop algorithms to help time your unwinding of your position and to give you the maximum value for your time. And if you feel that you're gaining value from this episode, I would urge you to hit the like button. Hitting like lets me know that I'm giving you the content that you want to see, and it helps spread that value to other people. I thank you for your support. Now, it's important to note that activist investing is a form of value investing, but it's not for the faint of heart. While traditional value investors might sit back and wait for an undervalued company's stock price to gradually rise, activist investing are all about taking action to speed up the process. They'll zero in on companies with weaknesses or problems that are dragging down their value, but they'll also come armed with solutions. Maybe it's cutting costs, boosting revenue, or selling off underperforming assets, or just shaking up the board. Whatever the case, they've got a plan to unlock that hidden value. It's not always pretty, and it's definitely not a guaranteed win. But for those bold enough to take on the challenge, the potential payoff can be huge.